Welcome everybody on the 11th of November, Veterans Day. Happy Veterans Day. We are looking at a chart as always. We start out with a chart of the S&P. We closed at 1264 today. This looked like a potential pennant pattern last week at this time. If we look where we closed at this time last week, we had a nice formation and we were looking to break out above this formation. And that actually took place on Monday, actually Tuesday, which was a very good day. Tuesday was a good day. So here was Tuesday. We broke above that. So that was a technical signal that we were going higher based on probabilities. And then Wednesday it was all taken apart. Not only was there no follow through, but we also took out the low on Friday of last week. So this kind of shot a hole in this pattern at that time. Yesterday was a decent day, and again today we had a big day, follow through to the upside on lower volume. So as it stands right now, as of the 10th of October, we still have the overall trend in the equity markets as long. We are watching the low that we put in on Wednesday, 1229. We want to hold 1228. We think if we test these lows that were put in Wednesday and Thursday, and we were to break those lows, then the next stop, based on probabilities, would be 1200. If we remove these two smaller pennant trend lines here, and we bring in a larger downward sloping trend line going back to mid-July, we can see that we still have some overhead supply here short term. So we would want to see next week, regardless of what the news is, follow through to the upside. If we see this type of follow through to the upside, then we will eliminate our hedge in the managed accounts, which is the SH. We can take a look at that now. What we want to do is eliminate the SH in the event, obviously, that the market goes higher if it was to take out the lows that we put in on Tuesday. All right, so if we take out those lows on Tuesday, we think the odds are that the equity markets are going higher, and obviously it would be time to take the SH hedge off. All right. When we look at a chart of the SPY, which actually shows gaps, we see that we put in a gap today because we opened up higher. We do believe, regardless of where we go, even if we get through these highs here, this gap will be filled probably next week. Again, we want to hold basically 123, 1228, 1230 on the S&P cash. If we don't, then we think we're going to 1200. And I think if we go to 1200, that this is a top for the year, basically 129, 130 on the SPY. Let's take a look at the NASDAQ, COMPQ. Very similar chart. Again, we want to hold recent support where we would call it 1200 on the S&P. We would want to hold 2600 on the NAS. For our purposes, we would be adding to the Qs or initiating new positions in the Qs if we were to get a close above 59. Close above 59, as I had mentioned in yesterday's still chart, if we took out the lows that we put in yesterday, we would be out. All right. But as it stands right now, the S&P 500, again, for the second time this week, is back above the 200-day moving average. Would definitely like to see it, technically speaking, get above this downward sloping trend line sometime next week. Let's take a look at, we'll take a little bit of time on Apple here. We did put up a still chart yesterday. We would play a bounce at support at 360 if in fact it got there. If it does get there, we'll talk about our stop at that time. If we were to stop falling, like we said in yesterday's still chart on the 10th, and we were to get above, let's say 408, we would get long at that time with a stop roughly 5 to 7% back, thinking we're going to fill this gap here. Let's finish up with GLD. This is another position we have in the managed accounts. As you can see, it got kind of dicey like we talked about the last 2 or 3 weeks in here. This was nice, this move here that enabled us to let go of any hedge that we had against our long GLD position here. And then this was a little interesting here yesterday. So we wanted to sit up on our seat. We want to make sure that we hold the 50-day moving average and the lows that we put in yesterday on GLD. If we do not hold the lows on a close on GLD, meaning yesterday's low on a close, we will definitely be exiting GLD. So if we close down below the low yesterday, which was, let's see, that low was 168.83, we'll be gone. We'll be gone out of this position. But as it stands right now, support and the 50-day moving average are right around 168. If we were to get taken out, we would get back in basically above 176. All right, you guys, that's it. Doug McKay, antiwallstreetguy.com. Happy Veterans Day. We'll see you next week. Thanks.